Hey everybody, happy Monday. It is Monday, April 9th. So I want to start off with some commentary. First things first, today is a Monday, as I stated, so therefore I will be working on finishing up this week's issue of MMT Trader. It will be sent out later today. If you are not on the distribution list and if you want to get a copy of the issue, go to my website, pitbulleconomics.com, and sign up for a 30-day free, no obligation trial. In the meantime, you could download and take a look at the back issues. So let me start off, I guess, with just a general overview. Friday, once again, we saw another hysterical reaction in the stock market as a consequence of escalating talk of a trade war between the United States and China. Now, you know, I have made a number of videos now where I have discussed this notion, this concept of a trade war. Let's understand something, okay? When you have a situation like this where the United States imposes tariffs, basically what is happening, if I can distill it down in its most basic form, all right, because there is just a redistribution of income and product going on. In the current reality, let's say where the United States is a net importer from China, China gets the income and America gets the product, okay, of equal value. In other words, China gets paid for the products that we consume, that we import. If tariffs result in a shift in that equation, then we will see a gradual turning around of that distribution where we get the income, United States gets the income, so we get more of the income and less of the product. The product goes to China and vice versa. China gets less income and more of the product. The value of both are the same. What you're talking about is real product, that's goods and services, and then real income, which is the monetary payment, all right? Here's another thing. So that's a very simple and easy way to understand it. There is no loser per se. It's just a redistribution of what is going on. One country gets more of the product and less of the income, and the other country gets more of the income and less of the product. And you know, for a long time, I have said that we are getting the better of the deal. Maybe it's not correct to say that, but I said it because we get the real product. We get the electronics, we get the TVs, we get the iPhones, we get the textiles, we get the computers, we get the toys, whatever. Those are real things that define our standard of living. All right, China gets the paper dollar that we print, which they want. All right, but now if the tariffs result in a shift in this equation, so to speak, we will retain the income as opposed to sending it away to the Chinese. But at the same time, we will send away more of the real product, which China will receive. They'll have less of the income. All right, so there's no loss. It's just a change in the composition of that relationship. That is it. So the reaction by the market, this tremendous sell-off, this panic, it is the equivalent of the Brexit reaction. Remember, I told you after Brexit that there is going to be no financial economic consequence and that the British pound was going to recover all of its losses, which we have seen that happen pretty much. I mean, it was at 146. The pound dollar was at 146 when they voted yes on Brexit. It's at 141, 142 right now. I said that, okay? So you have that. All right. number two, we are seeing now a very significant, when you talk about the stock market, and I have mentioned this many times over the course of the rallies that started after the election in 2016, that it was asset managers who were large-scale buyers of stock index futures, thus driving up the market. And for a long time, I said that the rationale behind those purchases, it was really not there. We had not seen at that time the tax cuts. We hadn't seen a lot of the proposals that Trump had promised in the campaign. We finally saw them recently at the end of last year, at the end of 2017, we finally saw the tax cuts, all right? And we have seen an increase in government spending. We saw Trump signed a new omnibus spending bill last week, which, by the way, he wants to rescind that, but that's another, I'll save that for another video. Or maybe I will make a statement on that in a moment. So the initial part of the rally, which was, I guess, the largest part of the rally, was based on expectation which had not yet come to fruition. But yet, asset managers bought a net million contracts, and when I say net, that's long contracts minus short contracts of S&P futures. We are seeing a wholesale liquidation of that going on right now. So they're down to about 500,000 net. They liquidated half of that. Dealers are still short, and curiously, the speculators who had been short the entire rally all the way up, okay, they're losing money. They're big buyers now, the speculators. So we are seeing a shift in the market composition. I would say that, if you see the asset manager net long position come down a little bit more, I mean, it's getting close to where it was at the very beginning of this rally. I think they were net long about 250,000 contracts. We're almost there. A lot of the selling pressure is going to be out of this market, I think. All right. So what am I saying? I'm saying that you probably have to buy these dips right now in stocks. All right. Having said that, now, I have done a lot of videos in the past. I have spent a lot of time reflecting on the fate of the US dollar, and let me first say that I have never been one of these kooks who constantly talk about the dollars going to zero. As a matter of fact, you can go back at the time when the Fed started to really, really aggressively engage in quantitative easing and all the extraordinary monetary measures, when all those idiots out there were saying the dollar's going to collapse. They're printing money, right? I said the dollar is set for a long-term rise. That was in 2009. Then in 2015, at the end of 2015, when the Fed reversed course on monetary policy and started raising rates, when everybody said, well, the dollar's really going to take off. See, I had already said that 6 years before. I said that was the beginning of the end of the rally in the dollar. We are going down. And I have been right. The big thing here, which has entered the picture, and I have spoken about this, is not of an economic nature. It is of a geopolitical nature, and that is I have called it the weaponization of the dollar, the aggressive use of sanctions by the United States on Russia, tariffs, locking, freezing assets, all this stuff. The world sees what's going on. All right? This is not an economic issue which is eventually going to reach some new equilibrium. The pendulum swings back in the other direction. The dollar goes up. No, this is a fundamental change. This is a paradigm shift. This is the equal to the end of Bretton Woods in the early 1970s, all right? This weaponization of the dollar, the aggressive use of sanctions, the ability to lock entire nations out of the global dollar-based transaction and clearing system has profound implications for the fate of the U.S. dollar, which I believe is now in a permanent downtrend as a result. The world cannot take the risk. Countries cannot take the risk. Entities cannot take the risk of transacting in dollars and net saving in dollars when the United States has absolute control and has now used that power in a militaristic type of form. Can't take the risk. People are starting to see that, and I have used that as an explanation for the rise of cryptocurrencies, but we are going to see, I don't want to extend this video too far, but this is the beginning of what all those crazy nut job people were talking about for a long time, but their rationale was wrong. They just said, they're printing money. No, it has nothing to do with that. It has to do with the weaponization of the dollar. The world will seek alternatives. It has to. It has to. Okay? The global economic financial system cannot continue to operate with the dollar having now been weaponized by Washington. That's it. So the greatest trade you can possibly make right now, which would absolutely solidify your wealth, is to be short the dollar. However, unless you have mental game, an extraordinary mental game, you probably won't make any money from it, because 100% of you, and I use that term because you know what I'm talking about, you'll go short, and 10 minutes later, an hour later, you'll make a little money, you'll want to take it, or worse, it'll go against you and you'll freak out and you'll panic, or you'll hold it for a week thinking you're some soldier. No, this is a 10-year, this is a forever thing. This, you put it away for your kids, and nobody other than my people will know how to ride this. Okay, it's going to take monumental mental game. All right, that's it for now, folks. Go check out my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Maybe I'll see you later. Bye-bye.